Hi everyone, it's Sean from STK Markets this morning. Today we've got John Forwood, the investment committee king of Lowell Resource Trust. John, we've been following for quite a few years. We've supported him in placements, we've bought on market, and our clients have virtually doubled their money. John's performance is second to none. He's been doing this for over 10 years, outperforming the market, which is the ASX Junior Resources Index, I believe. John, you've beat it time and time again. This year's no exception. You've virtually doubled the index return, close to 100% return for investors. This is an income producing asset, so people in the small part of the market don't typically get dividends, but your fund does pay people dividends. So it's really aimed at the majority of investors out there that also do want an income. But that performance, John, congratulations. Yet again, it feels like deja vu. We've had this conversation before.
Thank you, Sean, and thank you very much for all your support over many years. It's been great working with you, and we really, really appreciate the support from STK Markets. So thanks very much. But it has been a spectacular year, and looks like we're finishing on a pretty high note.
John, we've invested with you in Southern Cross. You were the geologist that I took up to site to help me look at what type of rocks there were, and you're a very good guide to helping us invest in that investment where a lot of my investors made a lot of money. We've also looked at other investments with you, like Hannon. You've co-invested with us. But the reality is, John, we don't have the time to look at all the investments that your investment committee does. Like, there's certainly a big team behind you. We've met them all. We're very close to them, very fond of them. They're very committed, professional, and obviously the results are outstanding. And that's why we've been supporting you, because you need a team. John, can you just go into who your team is, and then we'll talk to where you're seeing the market going in 2026?
Well, the team is led by Steve Mitchell, the chairman of the investment committee and chairman of the fund manager. And he's really the one who, brought me in and has pulled the team together. We've also got the everywhere man, Richard Morrow, on the investment committee. He's absolutely passionate about resources. And in particular, you mentioned Southern Cross. Richard is very passionate about Victorian mining. Then we've got the Lowell team, the back office behind us. And we've got a new recruit in a young geologist, Darcy Steele, who's joined us recently to assist with the analysis of all the opportunities that come across our desk.
It's been thrilling watching your mind work over the years. I remember 2-3 years ago, you were calling gold 5,000. The portfolio's positioned in gold significantly, which is why I've had that fantastic performance. But this was before the herd got behind it. You're a forward thinker, forward planner, and you're looking for these opportunities. And I know you've got a very strong background, what you've studied at university, and you've demonstrated to us and your investors in spades. Where's your crystal ball saying the market's going now? Because you've called silver, you've called gold, you've called a lot of different commodities, the critical metal space. You definitely know where to invest. Where can we put our money? Obviously in the well, in 2026.
Well, one call I have been making, which is very counter-cyclical at the moment, and it's partly because gold has run so well, and we're definitely still very positive on gold, but the gold oil ratio has got completely out of whack. It's the highest it's ever been. It's over, well, apart from when oil went negative at the start of COVID, the gold oil ratio is the highest it's ever been. It's over 60. I think it was pushing 70 recently. So I think it might be smart to put a bit of money into some oil-related investments. In particular, oil stocks, junior oil stocks have been so beaten up. They are trading at all-time low multiples, ridiculous multiples of, 1.5, 2 times cash flow, etc. So there are some fantastic opportunities there. I think, there's a lot of talk at the moment about oil gluts. But that one of the big drivers of the oil market is the US dollar. And if you think the US dollar may start to weaken, that will be positive for oil prices. And with oil prices being so low at the moment, we know that the cure for low prices is low prices. I think it might be prudent to look at oil side of things in 2026.
Okay, that's good to know. Obviously, in terms of percentages, what part of your portfolio do you have in all going into 26?
Pretty low, because all the stocks have been beaten up. But Sean, we did have one fantastic winner, which contributed to our success in 2025, and that was a company called Finder Energy, which went up 8 times over 2025, and we have exited that. So we're now looking to redeploy some of that cash into other energy-related investments.
Well, it's certainly great to know because obviously gold looks like it's kept going up. You've got other commodities. John, it looks like with these tariffs that have been impacted or a direction of Trump, it's causing inflation. They're sort of giving up the tout on that, which I guess then comes to quantitative easing, printing money. What's the world's views on inflation in the States? What can it do for commodities?
Yeah, you're right. There's a lot of talk about the US economy being run hot. Let inflation run and grow the economy at the same time rapidly. And that would be very, very good for not just commodities, but junior resources prices as well, particularly if there's pressure on the Fed to keep cutting interest rates, which they have done again this month in December. So if you have lower interest rates and high inflation, you should see strong, very strong commodity prices. And you should also see investment continuing to flow into junior resources stocks. So I think across the board, that would be really very positive for the sector that we're in.
One that's on our mind at the moment is lithium. Have you looked at that at all for 26? We're seeing that there could be a shortage for the first time in quite a long time. The price is on the move.
Lithium's a really interesting market. I think one of the important factors to remember about lithium is it's still a very small market, which means that it's quite easy for the market to move from oversupply to undersupply and vice versa. So we've been in oversupply for probably the best part of 2.5, 3 years. And that is typically, if you look back over the last 10 years, that's typically the cycle for the lithium price. And we've seen a really nice upswing in lithium prices over the last 3 or 4 months. I think we're up over 12 months, lithium carbonate's up around 30%. From a low back in sort of the middle of the year, we're up over, well over 50% and sometimes more than 100%, depending on which price you look at. So that's attributed to, I guess, 2 things. One is restriction on some of the low-grade Chinese lithium mines, particularly, I don't want to try and pronounce it, but the big pillarite mine in China has had its permit suspended. But also, I think the bigger picture is what's called BESS, BESS, battery energy storage supply or stationary storage. That is the outlook for that is very strong. And this is also driven by, everything seems to come back to data centers, driven by potential demand from data centers. The fundamentals for lithium are good, and the small market and the tight market is good. And I think 2026, as we go into 2026, there looks to be good potential to continue that upswing in lithium prices.
Well, we've certainly got our exposure pursuit, which is looking at putting out a PFS towards the end of January. So that's going to be an interesting one to watch. John, with your travel, getting your boots on the ground, kicking the rocks, as you just said, it's obviously very important to do that. What do you enjoy most about going to these far out locations, which typically you don't go to on a summer or European vacation? What's the best thing about going to these locations and seeing these mines or these prospective mines in your travels?
I think it is probably meeting the management and spending time squashed in a small car or a forward drive with management, hours on the road, just chatting to them, getting the background, finding out how they're thinking, which of their particular projects they love the best. Yeah, recently had the chance to go from countries far afield as Ecuador to Serbia and spend time traveling with management there. And this management, they come from all parts of the globe, obviously, all bring a really different perspective. And that's something that we've been able to tease out with our Lowell Drilling Deeper, Lower Lodestars webinars to find out what makes these guys tick and what's the secret to their success, particularly in the exploration front. So if you have a chance, in 2026, we'll be continuing those webinars once a month. We've got a nice library now of webinars that we ran this year, and that's on YouTube. So go and have a look at those if you want to learn a bit more about the exploration process.
It's certainly very informative. It's like us trying to communicate to our investors well into these things, and you've certainly got a lot more depth with the fund, so it's definitely worth having a look. But John, it's been thrilling working with you. The placement, obviously, we supported as normal with yourself. We've been buying on market. It's certainly one of those years. Are there any changes ahead for the will, or is it just business as usual, just moving forward, growing the fund to the new market caps as you keep growing it through profits?
Look, I think we do want to expand our exposure into a number of other commodities, including uranium. I've obviously mentioned oil. I think the fundamentals there are very good. We're going to stick to our knitting in terms of have a substantial exposure to precious metals, but I think we're going to try and expand our exposure in things like copper, uranium, and energy as well. So that's the outlook for us in 2026.
Well, John, the key things in looking for a stock, just to let everyone know, I think we're all pretty confident on what we're thinking. What are the three main drivers for you when you're looking at a share to put into the portfolio?
Well, I think everyone always says, it's people and projects. It's no good having great people and great projects if the investment is fully valued or even overvalued. So you've got to look for value. We're playing in a fairly high risk end of the market in terms of pre-development, a lot of exploration upside, hopefully. So we're looking for the 10x upside. So we've got to see some really deep value to get in. So I guess, they're probably the three things: people, projects, and value.
That's fantastic, John. Listen, as we discussed earlier, it's almost 100%. You've almost doubled the return on the index you benchmark yourself to, 22% year on year for 10 years. So this isn't a short-term anomaly for you. You're the Warren Buffett of junior resources. And you continue to deliver. So we're very happy to keep in communication, John. We just keep seeing success after success after success, and those dividends that you pay certainly are worth looking at, because typically a lot of our investors are approaching their retirement years where they need that income. And the will certainly provides a very decent avenue for providing income in their portfolio. So if you haven't noticed, it well does pay a dividend. It's certainly worth looking at. And it is trading at a significant discount to NTA. It's something that most LICs do. You're not abnormal. But there certainly is a lot of value created just by buying the LRT is the code on the ASX. And straight away, there's a higher value in the underlying assets in the portfolio. So it's been a pleasure to watch, John. We wish you the best of luck for 26 and beyond. But we don't really think you need it. We've got to say at STK, the harder you work, the luckier you get. And we know you're always on a plane. You're always looking at opportunities, and your team, particularly behind you, are working very hard to get those returns for investors. And that's why I can happily say you're very lucky, because you're very busy.
Yeah, thanks, Sean. Certainly do try and get out and do as many site visits as possible, which takes us to all parts of the globe. But that's a really valuable part of it, is kicking the rocks, getting the boots on the ground, so that you can get a good feeling for not just the company management, but also the potential of the projects.
You're certainly not a desktop fund manager, John. Good on you, mate. Thank you so much for this year, John. We've made a lot of money with you, and we want to continue to do so. So thanks a lot for your time, and Merry Christmas, and have a Happy New Year.
Merry Christmas to you, Sean. I hope you have a great bit of time off and summer holiday. And yeah, thanks once again for all your support for the Lowell Resources Fund.